Hello everyone, good afternoon, welcome to week 4. This week we're going to begin to talk about corporate taxation. So you'll be using the corporate chapters in your book. Make sure you're looking at the right chapter. The first chapter is on tax research, and during this week we'll learn about closed facts and open facts situations. Some considerations in tax planning. We want to maximize the taxpayer's after-tax return. Remember, there are tax ramifications to all stakeholders in the corporation. There are other costs of doing business that you would need to consider. Also, potential changes in the tax law. You need to always be looking at the tax law and planning what might be coming up. And there are also financial accounting implications as well. The steps in the research process. First, you'll determine the facts. You may need to identify and gather additional information. Next, you'll want to identify the issues or questions, and you may need to restate the questions. Then you'll locate the applicable authorities, evaluate the authorities, and choose those to follow where the authorities conflict. You'll analyze the facts in terms of the applicable authorities, and then communicate your conclusions and recommendations to your client. Remember that you may need to gather additional facts or restate the tax or legal issue. There can be more than one acceptable answer, or the answers may not be clear. We call this a gray area. Oral advice should be followed up with written communication if it's a complicated issue. The tax law provides certain terms and phrases, examples like Section 162, ordinary and necessary, Section 1001, sale or exchange. The researcher's task is to determine whether or not the client's facts fall within the terms or phrases. The sources of tax law, this includes your Internal Revenue Code, Treasury regulations, judicial cases, and Treasury publications. Legislative process, a tax bill is introduced. It goes to the House Ways and Means Committee. They hold hearings with public, the Treasury Secretary, and the IRS Commissioner. If it's rejected, the bill dies. If it's approved, it gets debated by the House. If it's rejected in the House, then the bill dies. But if it's approved, then it's pushed forwards and it goes to the Senate Finance Committee. They hold hearings. If it's approved, then it's debated by the Senate. And then if it's approved by the Senate, then differences between the House and the Senate's versions are resolved by the Conference Committee. At any point, if it's rejected, then the bill dies. If it's approved, then it is reconciled and the revision is sent to the House and the Senate. And then if it's approved, it's sent to the President, who can veto it or sign it. If he signs it, it becomes law. If he vetoes it, then it's voted on by the House and the Senate. And then the question is, does it receive a 2/3 majority vote between the House and the Senate? If it does, it becomes law. If it does not, then the bill dies. Any amendments to the bills during the process are recorded in the committee reports. Transcripts of the House Ways and Means Committee, the Senate Finance Committee, and the Joint Commission, as well as the Senate and House floor debate, provide the legislative history for the bill. Tax provisions that are passed, they become part of the Internal Revenue Code. Part of Title 26 of the United States Code. This was codified in 1939, 1954, and 1986. The current version is known as Internal Revenue Code 1996. Newly passed tax legislation is incorporated into the code. The code is organized in the following manner. You have subtitles, chapters, subchapters, parts, subparts, sections, subsections, paragraphs, subsections, or subparagraphs, and clauses. So this is an example of citing to the code. So you have Title 26. This is all matters concerned with taxation. Subtitle A is income taxes. Chapter number 1, normal taxes and surtaxes. Subchapter A, determination of tax liability. Part 1, tax on individuals. And Section 1, the tax imposed. And here at the bottom of the slide, you see the scheme for sections and subsections. So it would be written Section 165, subsection H, paragraph 2, subparagraph A, and then clauses 1 and 2. And then we have Treasury regulations. This is information issued by the Treasury Department to clarify the code. The Treasury does not always update the regulations in a timely manner due to the numerous IRC changes. Tax researchers should always check to make sure that the regulations are up to date. The types of Treasury regulation include proposed, temporary, and final. Regulations can be in the proposed, temporary, and final form. Proposed, these are not authoritative, which means you can't really rely on them because they're just proposed. We don't know how they're going to end up. Temporary, this is guidance that is issued quickly after a major act, and it is binding on the taxpayer, although they are temporary and they could change. Final regulations, these are presumed to have almost as much weight as the internal regulation code. Final regulations are binding on the taxpayer as long as they don't conflict with the plain wording of the Internal Revenue Code. And then next we have interpretive regulations and legislative regulations. So for example, on citing regulations, here's your example, Regulation Section 1.165-5. The proposed regulation will be designated as Proposed Regulation Section instead of Regulation Section. And temporary regulations are designated Temp Regulation Section. And then you have administrative pronouncements. This includes revenue rulings, private letter rulings, Treasury publications, notices, information releases, technical memos, and revenue procedures. So revenue rulings, these are many cases discussing a hypothetical taxpayer with a hypothetical tax situation. The citation example is shown here. Revenue procedures, these include IRS pronouncements dealing with IRS procedural matters and requirements for filing a change in an accounting method, for example. Here's your citation example. They start with revenue procedure. And then you have private letter rulings. These are issued by the IRS to a taxpayer for a specific situation. They are only applicable to that particular letter ruling and that particular taxpayer, although they are good to look up to kind of have an idea, if you had a similar case, how the IRS might rule. Some other interpretations include technical advice memoranda, information releases, and announcements and notices. So this is just a brief overview of the IRS code and how it's put together and some of the various rulings and pronouncements that might be put out by the IRS. So after reviewing the lecture, I'm going to post a question in the discussion board. Please take a moment and participate in that discussion, and I will see you there in the discussion. Have a great week, everyone.